This is FinTech Futures at Sibos, and I'm joined by Vivek Ramachandran of HSBC. Vivek, thank you so much for taking the time out to speak with us. Just to get started, would you like to give us a quick introduction to yourself and your role at HSBC?
Hi, so I lead HSBC's global trade finance business, which involves the full suite of products we offer our clients to help them manage working capital, mitigate risk, and facilitate trade.
Excellent, excellent. And you're here speaking on a debate this week about whether financial services is ready to make the leap into a new era of sustainable business practices. What's your take on that then, as it is at the moment, and what can you tell us about how HSBC and other banks may be ready to make that leap?
So let me start with what HSBC is doing. So first and foremost, we've made a very clear public commitment about getting to net zero by 2030, and it's a strategic priority for us as the bank, one of the 4 pillars upon which the bank strategy has been built. And we're doing this in 3 ways, because the impact we have is obviously larger than our footprint. First and foremost is helping our clients transition their activities. The second is helping them migrate their supply chains to net zero. And the third is facilitating the development of new technology and new industries through capital expenditure. I think it's probably fair to say we have collectively, and HSBC as a group, has a long way to go to really solve this problem. But representing HSBC, I'm quite proud of the commitments we've made and the genuine enthusiasm with which the industry is going after this.
Excellent, excellent. I mean, you've mentioned there, obviously with your focus on trade finance, what are the key challenges of embedding that sustainability into the supply chains?
Supply chains have evolved over many, many decades to minimize costs, right? And they've done that well, you would argue. But that cost minimization has come at the expense of transparency in many cases. So the average company doesn't know who's in their supply chain beyond the immediate suppliers they engage with. And if you look at emissions as one example, and you pick a retailer, the overwhelming majority of the emissions will be Scope 3. So if you can't measure who's in your supply chain and the activities, it's very difficult to influence your overall footprint. So I think supply chain transparency is going to be a starting point. And financing is a really important tool to drive behaviors, both good and bad behaviors, whether you penalize or you incentivize. So I think trade finance has a really important role to play to help companies achieve their overall ESG objectives.
Excellent, excellent. And what kind of initiatives then has HSBC been putting in place to try and tackle some of these challenges?
Our full suite of trade finance products are now sustainably enabled. So be it supply chain finance, trade loans, guarantees. So that's a big emphasis for us, but we're also mapping out ecosystems, whether it's renewables, whether it's electric vehicles, but we're trying to map out everyone in an ecosystem. And finally, we're partnering with third parties who provide accreditations where companies can use them to help. So now you've probably read about some of the flagship supply chain deals we've talked about in the public domain, be it Walmart with environmental or social, Levi's or PBH. So there are a lot of anchor companies working with HSBC to embed financing into their supply chain programs.
Excellent. I mean, in general as well, I mean, as looking at the industry, do you think companies need to be held more responsible when it comes to the companies that they work with, the companies that they invest in as well, when it comes to making sure that ESG practices that they're also providing are hitting the mark?
I think the reality is companies are being held more accountable. It's not whether they should be held accountable. They are being held accountable today. So whether it's the European Directive or the German Due Diligence Act, companies are now being held accountable for the absence of forced labor in their supply chain, the absence of human trafficking. So companies are being held to a much higher standard, not just in their activities, but the activities of their suppliers.
Excellent. You spent much of your career in the trade finance space. How would you say it's evolved over the last 5 years or so, maybe?
Look, I think it's a really exciting time to be in trade finance. Trade finance has been described as the last analog frontier in banking. I see that changing in the next 5-10 years. But the 2 really kind of material changes is trade finance now is no longer just something that is on the treasurer's agenda. The CEO and the CFO emphasize trade finance because they realize the importance of supply chain resilience. They realize the importance of sustainability, and they realize the importance of trade finance as a mechanism to drive both of these. So that's a big change. And the second is technology is now so intertwined in everything we do. So it's a new range of skills, a lot of new talent coming into the industry, exciting fintechs developing. So lots of change.
Excellent. I mean, you mentioned technologies there and fintechs as well. I mean, what are some of some of the maybe tech initiatives at the moment that are in the trade finance space that you think are most exciting?
The single biggest change we've seen is the access to data. and our ability as an industry and the participants within it to act upon the data. So the full range of solutions, be it AI, machine learning, cognitive automation, and using data to remove inefficiencies is the biggest change we're seeing in the industry.
Excellent. Excellent. I took part in a panel last year at Sibos where the discussion was whether interoperability across different supply chains and trade finance was a pipe dream or a possibility going forward. A year on from that now, what do you take on? What's your take on that? Do you think, and do you think that we're made any progress there, or do you still think it's still kind of off the distance and there's more collaboration and work that needs doing?
If I'm honest, it feels like 2 steps forward and 1 step back. Right? So we've seen, on the one hand, we've seen some incredibly exciting developments. The UK passing the Electronic Trade Documentation Act, the likelihood of a universal electronic bill of lading, ICC driving digital standards. These are material steps forward to help us digitize trade. On the other hand, I think it's fair to say a lot of the blockchain-led consortiums haven't quite delivered to the potential that we expect. So I think I'd have a mixed answer to whether we've seen enough progress over the last calendar year. But we at HSBC remain quite hopeful that in the coming few years, you will see genuine changes to digitize trade. As I think, to paraphrase Hemingway, how does the world change? Slowly and then suddenly.
Excellent, excellent. Well, yeah, we'll see. We'll see. Maybe next year we can catch up again and see how it's going.
Indeed.
Thank you again so much, Vivek, for taking the time out for speaking with us. It's been a pleasure.
Pleasure.
Thank you.